Alright folks, this should be a little bit better, a little easier hopefully. Just working out a few kinks on this setup, and hopefully it will just get better over time. Had a lot of really witty comments and wonderful things that I said, but alas, they're all gone now, so you just have to take my word for it. Anyway, what I was really trying to get at was initially here, I'm not trying to teach you about trading, although I will. And my initial point here was to kind of prepare you, like avenues to get started. And oh dear, looks like I lost. Anyway, it's okay. I didn't really have much to lose the last time around, but it does stink that I lost it nonetheless. Okay, so what I want to do is give you guys kind of a introductory to how I trade. The idea is not to give you an introductory to trading in general. I'm assuming that you have a certain foundation already, and very possibly have already blown some accounts at this point. If you have, stop. Don't stop trading, but don't trade with real money. Do not trade with real money until you are successful consistently using a trading log as well to guarantee that you have in fact successfully traded excuse me, and consistently made profits. So one website to get the basics under your belt before you come here would be to go to babypips.com, and then once you are done with that, come back here. Now once you're here, you want to set up an account on tradingview.com, because tradingview.com, that's where I'm going to be presenting basically my method for trading, and just the tools I'm going to be using and things like that. Now, if you happen to use Alanda as your broker, you'll find that the interface is very similar, although not exactly the same, but very similar. So there'll be a lot of transfer. I'm not telling you to use Awanda or any particular broker, but that these two are very similar, probably run by the same people actually. So this is for your chart. This is for your initial education. Get your feet wet. Go through all the courses, and maybe pick up one of the strategies there and trade with it, and keep a journal. You can use tradingview.com for using their tools to follow along with me, and I hope that you do that. And then you can use Awanda if you like, because these tools are very similar, and you can get a demo account there and track your progress, and actually keep statistics inside the site. So I'd recommend that you do that. We can maybe go into that a little bit more later on, but for now, I wanted to give you that. Also, Zero Hedge is a great general finance site, so you might want to start reading that to get yourself aware of current issues in the finance community and economics, and you probably want to start acquainting yourself with that. There's a lot to be said. I mean, some of these topics are potentially endless rabbit holes, but we're not going to go down those rabbit holes in this particular video. So anyway, so this will get you started. Just with some initial websites. Some general comments. Don't worry about your don't worry about what your forex teacher looks like. Avoid slick marketed. Slickly, it's probably not a correct word, but slickly marketed content. Always view claims by traders and educators skeptically. And that's probably pretty good for now. So anyway, don't worry about what people look like, guys and gals. What you're worried about is not what they look like. You're worried about, do they actually know how to trade, and can they do it? Have they done it themselves? Have they succeeded themselves? And or are they just trying to sell a book? Okay. And that goes back to the next point. Avoid slickly marketed content. If it's very slickly marketed, or they do the video where the guy's got the hair just right and the fine clothes, and he's getting out of his Lamborghini, and he's like 32, Wonder Boy, genius, follow my method, where I do, teach you 2 methods for taking $5,000 and turning it into 55 or whatever, they always got the hand motions down, and they're really, just avoid slick marketing. It's manipulative, in my opinion, and as are a lot of things in the world and in the media in general. So always view people's claims skeptically. If they say that they've, buy my book because I'm the guy who turned $5,000 into $5 million overnight, and you don't want to be connected to people like that, more than likely. I do recommend and read as many books as you can. So I do recommend you just read and keep reading other people's books. You want to develop a trading mentality, and so that's why. So that's kind of underneath that one. So these are related as well. Anyway, I'm not going to worry too much about that organizing right now. But these are definitely, you see I'm just doing this on the fly. It's good to be prepared. It's good to be disciplined and things of that nature. All that is very important. But right now I'm not focusing on those things. What I'm trying to focus on right now is just kind of giving you a quick head start, quick spin up, if you will. Because I'm not going to teach you the basics. I'm expecting you to go learn the basics yourself over a place like babypips.com. There are other sites too. I'm not paid or endorsed. I'm not paid by any of these people to direct you to them. Now, I do have an affiliate link in my video. If you would like, you can find it there, and you can go there and you can use it. But I honestly, it's not that big a deal. I just put it there just because it just kind of seems like I should. But I don't need your money. So, you know, if it's too much trouble, please don't do it. I don't want to pressure anybody to do anything, and especially to buy anything, so forth. Because if you're getting the slick marketing and the pressure and all that, and you're being told, if you don't buy this book, you're stupid, and whatever it is, you know, like some of these manipulative techniques that these various groups, what do you call it? Um, the multi-level marketing groups. These groups, not all of them, but you can get some good information and good education from some of them, honestly. But some of them use very dirty, manipulative techniques, and you don't need to do that. In fact, this is not anything to do with network marketing, multi-level marketing, that kind of stuff. But I just said it as a comment because a lot of people that are trying to, you know, quit their job to make an income and that kind of thing, they probably try multi-level marketing, and you know, they maybe didn't get the support they needed, or whatever reason it is. I think a lot of people just aren't good at it, and they bring in people that aren't good at it, and it's just, you know, they burn out and they move on. So anyway, so these websites are good. I recommend them. There are plenty of other good ones. These are some real good places to start. Later on we can cover other ones, but that's really good for now. I just want to kind of keep a certain amount of focus. So get yourself a demo account there. After you have gotten through all the education here, you can go ahead and kind of get acquainted with this while you're doing this. Maybe start to put into practice, and as you're reading about the basics, you can see the basics here. And then when you're ready to start doing some practice trading, you can do that there. And this is general. You should read this every day. You should also read it, you know, check out what it says for yourself. Don't just take anything that I say or that they say, just verbatim. You need to just double check everything. Think critically. Okay? So, moving on, just want to give you a quick introduction here. So, this is what my trading screen looks like. Yeah, you can see, you can go back. This is really what it looks like. I haven't changed anything. You can see some of my mistakes as well. Times I've, you know, traded against the trend. Times I've, you know, managed to still make good on it regardless. But anyway, there's a whole bunch of trades here. You can go and look at these components. You can see I have a lot of trades. I need to clean this up actually. But anyway, so you can see that generally speaking, come on, lock up. Seems to be, there we go. Okay. All right. So generally speaking, you can see that what I view all of the price of whatever asset. I happen to be using the British pound and the yen right now, but this is on the hourly chart. But you can see that I've got lower time frame channels that I just happen to allow them to be shown on the hourly chart here. I don't usually trade from here. You can see that you can, but I don't usually do it. You can make more money in a lower time frame. So this is a 15-minute chart. Tend to trade more along with this chart in mind, this time frame, and I'll even look at lower than this, and you see I also use moving averages. I tend to stick around the 5 period moving average. Sometimes even do the 1. You can see that here you definitely changed trends once it's flipped over and gone this way on this side of the orange line. This is the 200 moving average. The red is the 20, and the blue is the 50. And of course I've got volume, and I've hidden some of them as well with additional Bollinger Bands, which I rarely use. I do use this one though. So, excuse me, sometimes I think I can actually kill these two. And I have the 100 as well, but that's really, I don't know that I really need that one either. And the better, the cleaner your chart is, the better off you are. So I don't want to get real into detail right now about this, but I just want to give you an idea of what it looks like. So the way I basically would get started is I'd pick a really high time frame like the daily chart, and you can see even at the daily chart you can see that there's a channel here. Price tends to form a channel. It's pretty clear when you look here and there, along the edge, along the middle. You see how the middle lines up, and the bottom here and the top there line up. That is a channel. I'd say that this is a pretty good indicator here. That's kind of a hint right there. The little bit of say resistance there. That's also a pretty good indicator that it's encountering some kind of important support and resistance there. It's an important price level. And then when it gets up here and the price changes direction, that's the key. Price changes direction, it starts going off this direction, and that tells you, in fact, if you want to be really clear, you really kind of start down somewhere like this, and then you can adjust this over time as it becomes more clear as the price fills out. But down here, when this first starts, you might think, okay, well maybe the channel's here, but then this is often the channel also. Price a lot of times swings under the channel and then back up into the channel. And if you look, here's the fractal nature of these markets. Okay, see how, real quick diversion, here you've got, no, that's the wrong color. That's what I want. Okay. Okay. All right. So see how we have the channel, the green one, and these colors aren't standardized at this time frame. I like to use different colors in this for each time frame and try to keep them the same. But you'll see here that we have this channel form. You'll see that the price came down below the channel and then back up, right? Okay, well, that was for that channel, but then as it forms this other channel inside the larger channel, look what it does. It forms, it dips below and forms a channel again. So within the dip below this larger channel, you get another channel with another dip inside that channel, and that that's before this thing continues. And in fact, the more the more I look into this, you can see that this little bit here is the same bit here, and this little bit here is the same bit there. So, you know, this part is to the green channel as that part is to the white channel. It's pretty astounding. Probably if you drilled in, let's see, so this was a dip, so then here you probably get another dip in that channel there, though that's a pretty fast channel right there. So this dip may not really go into the same fractal kind of thing there. I hope this is making some sense. But anyway, I just happened to notice that. You'll see that happen time and time again. I've started to notice this more often. So you get, in this channel, you get this dip for this green channel. So let me do this again. It goes here, here, and then down the channel. Well, inside this green channel, just to reiterate, you go here, back up, and then you get this channel. Okay? So that's what I'm talking about when I say fractal nature of these things. Now, for it to continue, you would expect there would be, let's see, comes down, comes down. You expect there to be another, just as this is crossing here, as this crossed there, there would be another similar feature in the price. But this is a pretty high time frame on the daily chart to notice such a thing. So that's very interesting. It's predictive, really. So I'll be curious to follow that through at a different time. But anyway, sorry for that little diversion. So what I try to do is I keep green for like the really high time frames. I keep blue for the one below that. This one should be probably orange, just to keep it kind of consistent. I might prefer that color. All right, so then you drill in. Let's go down to. Okay, so you see I've already got orange, so I probably need to change that. It should probably have been blue after all. Alright, anyway, try to do a blue-green like that, just to have sufficient differentiation between the colors. Anyway, so you'll see I've got a lot of green here. Certain case I didn't follow it all the way up, and that was probably just bad timing on my part. I might have been on my phone and I didn't have access to this at that point in time. But when you make these channels, you want to see that the middle lines up at the 50% line and the middle of the price where it seems to stop. Okay, so price is going to stop and pivot along these important levels. So the important levels are at the size of the channels. So whenever price reaches the side of the channel, it's going to pivot. It may not pivot 100% exactly, precisely, but it'll be generally pivoting. Don't seek perfection here, but seek to get the overall general idea. And once you know that price tends to run in a channel type structure, then you can start to approximate it, and you can use the moving averages to approximate it. But you can see here, you know, even since price, I mean, this is history, you can see that from the history you can draw these channels pretty easily. You could say there was a channel there, but that was really probably closer to the 50% mark. This This is probably not drawn perfectly. There might be a better way to draw it. A little closer like that, perhaps. Then you get that touching 50%. It pivots there, and this also pivots at the top, and pivots there at that top, pivots at the bottom, pivots at the top, and bottom, top. So that's probably pretty good. That's how you can confirm that you've drawn your channel properly. You see that the price just stops and pivots and goes the other way. That's the only way you can really confirm it, ultimately. But a lot of times you don't have it quite this clean. A lot of times you'll see that it goes over the price, maybe a little over the channel top by a good ways before it comes back in. And in situations like this, it's important to, that's why it's important to have a moving average. So that was the 15 time frame. It's a little slow here. I'm gonna let it, there it goes. Okay, so you'll see here on the 5-minute time frame. Here's a good situation where I could have waited to close it till the moving averages cross right there, but in this case I didn't, because I think I just got up and I just wanted to, I just thought, you know, I think I'll just close this trade. You see this one is 102 pips, and I didn't want to risk that it would turn around and go the other way as I took a shower or whatever it was, but at the same time when I did that, I ended up losing out additional, from here to there, that's like 35 pips. So I missed out on that, and that was because I kind of ducked in and take a shower. But otherwise, on this particular situation, you really wanted to wait until it crossed. And you see that let's gotta reload the prices. This is why I need to edit my my chart and remove all these old trades. But I want to collect the statistics from my trading log so I can track my percentage wins and so forth and actual pips. But you can see on the 10-minute time frame, so you can use that to make your trading decisions as well. Just with the understanding that it's going to, you see how this kind of bumps off and keeps going. This tells you that it didn't stop in the middle. The way, at least the way that it was drawn at this point, the way your chart, your channel was drawn, and so either your channel is wrong, or it's just taking a little breath there before it continues going up, which is what it did. You see that it does that a couple, fairly often. So it may not actually cross the 20 and the 50 moving averages here, the red and the blue, but you come really close and make you think it's going to touch, or it may actually touch and kind of cross and then keep going. If it got here, I might consider closing my trade. You can move your stop order, let's say to right underneath the halfway mark here, the dotted line, and so if it goes below 50%, maybe it'll, just go ahead and get yourself out of it. And you see here that it didn't do that, and it kind of kept on going. So at least you would lock in additional profit. But this one here was good for about 40 pips, looks like. So this one was a loss. I went against, you can see I probably thought that was the end of the channel for some reason. And maybe I just looked at that, which wasn't ideal. And the cross there, I probably looked at that and decided to put in the trade. That wasn't a good trade. Okay, so that goes against me in my log. And then you see I went ahead and kept going, and I didn't try more than once. Once it blew past that, I let it go until it really confirmed that in fact the channel that matches here and there, that tells me again, even if you want to wait till it crosses again here, that's a good time to get into your trade. Now you might even wait until it gets to the 5-minute chart, but you wait and use the 5-minute chart, and I don't remember where it was now in this one. Get this further over. Yeah, okay, here we are. So you can use 5-minute chart. It gets you in a little sooner, and it generally it works pretty well. You really just have to decide. See, even as it crosses going back up, it'd be a good time to get in, and no time to get back out. So when you're not really sure where the channel is, it's still forming because you have these 3 points. You just have this 4th one and this middle point, and you may not feel 100% certain about whether it's going to actually, keep going, or whether you've drawn it correctly, or maybe you think it's going to break out. If you want to confirm before you take your entry, you might want to just wait for the moving average to cross on the 5-minute, let's say, and so that'll help you get in and get some profit. And then you see it goes back down, and then it kind of crosses here around the midway point, which is very possibly a sign it's going to turn around and come back up like it did here. Sometimes it'll bounce off the 50 more than once in a row. A lot of times it doesn't do that more than once in a row. So you just have to be aware of what the price tends to do, and based on what it tends to do, what you could have done is maybe move your stop down, not too close to the 50, but just maybe a little ways away. You can use I like to use Bollinger Bands to help decide where to put my stops. Like, for example, in this case, see the price went all the way up here. It was a little past this one. If you still might have gotten stopped out using the Bollinger Band, but that's still a pretty good guess, even though if it stopped you out, the odds are good that it won't do that to you. But back to the area we were talking about over here. You might put the stop right about there. You see it comes back across. So you could just, you could just watch, move the stop maybe to where that is, to that level, because the most recent swing low, and you could take a stab and say, well, it probably won't get past that there. If it does, then I want to get out, so maybe move your stop here. And you see that the price never really went back up there. In fact, the very bottom here was the top here, which is often the case. So that's a good place to put your stop. Goes past that, and at least you lock in the profit from this moving average cross at the top of the channel. Then you see it's pretty wavy. You could choose to get in again if you wanted to. It probably would be okay. You have to kind of play that by ear. What do you think based on the price? What do you think is a good idea or not? I might just wait, or I might maybe just put it in and just write it down, and just, no matter how wavy it gets, just decide, well, if it comes back on me too far, then I'm just going to allow it to get me out. But you see, price tends to go from top of the channel to bottom to the top to the bottom, and it may make a pitch stop and pivot on the 50% mark, the midway point. But it's still, if it does that, it goes back up to the top, it'll come all the way back to the bottom again. So so you see here that if you back further out, I really have to remove these trades because it's slowing my browser down. You see that it came down here, and then it bounced off early, kind of around, a little bit past the 50 way mark, even with this resistance here, or support. Well, that's really because this blue line was really just a short-term channel within the broader channel. And the broader channel tends to win out over the smaller time frame channel, the ones that cross the other channel. And so since this is the broader time frame, it tends to win out, and it does in this case, and it turns around and goes the other way. So what you would do here, if you're using my approach, is find your parallel channel, and you probably do something like that. Might start off with something like that. You see it moves quite quickly there, and so in situations like that, you can use the moving average cross, as you see right there. Even that one would have been okay, you know, if you just got in and stuck it out. But the moving average cross is going back the other way is just a way to confirm that, you know, that's a good thing to do, to go ahead and put in your trade to go back the other way, because we're using the channel side to be a bit of a filter, so you're not getting in and out, back and forth all throughout all of this. Although you could, as you see, it goes bounce to the midpoint, back to the bottom, back to midpoint, back to the bottom. You can trade that, it's fine. But if it gets too messy like this, just stay out, because there'll be plenty of opportunity to trade. Another way to look at this might be to start at the top, and I tend to draw across these points. So this moves so quickly that you really don't have much of a channel. It's just a very brief channel. It just goes back and forth a few times, and let's see. There we go. Goes back and forth a few times. A 5-minute moving average cross, it gets you in, it'll get you out right there. As it comes and hits the 200 moving average, and then it crosses again. You could do that. I mean, as long as the channel is established, which this one probably fairly well is, maybe you consider that okay. I might just wait until it gets to the top. You see here you've got a couple of different, you know, bounces off of the top, so right around here or here. You might start to think that, especially as the blue moving average, the 50, starts to trend down. You see it's peaked basically right here, so that's a good indication that you're pretty much on the downward slope. So you might have sold it there, and then you know, you're going to get a lot of this kind of back and forth, and the moving average crossing right over the blue, back and forth along the tops and the bottoms as it transitions, you know, like it does here, differing amounts, but that's where you're gonna see that. So you're gonna either ignore that moving average cross at that point, or you just get in until the blue starts to go the other direction. You see it really starts to taper off here, go the other direction along the top, and so you might just get in. But when you get in, do it when the price is going down. When the price hits the top of the Bollinger Band, get in there. Okay, that'll minimize your risk. You put the stop somewhere above this top Bollinger Band over here, and you see the price pokes through, so just go put it right a little bit above that. That way it's a pretty good stop. And then as it goes along, you might move the stop, certainly to cover your costs, and then as you see fit to bring it in and lock in some profit here and there. Where you see it's dangerous, you just have to trail your Bollinger Band on the way. And then as it crosses here, just a little past the 50 way mark, and the blue line starts to go the other way, then you know the blue line is really changing direction. You know you're really in a different trend. And let's see. Oops. And so you want to keep your screen as clean as possible. I'm showing this just for illustration, but you want to keep it as clean as possible, because you get too many of these things on the chart at one time, it's very confusing. So keep your screen clean, and as you see this, the blue line changes across the top here and goes back the other way. And it's a good place to short again. You can see I kind of went back and forth a little ways. Some of these were really not so successful, and in some cases you really have to stay with it, and there's even a loss right there. Some of these were closed pretty much at profit, or at break even. So generally not so great to go against the trend. It depends on the angle, the slope of the channel. So one thing to note, I'm trying to be, I need to actually come up with an actual script for the lesson. I just wanted to, see how flat that moving average is, the blue. It's a good indication that you have a flat side of a channel right there staring at you. And you'll see that that does basically hold true, and that's predictive. Okay? So you get this, you line up the blue line along the outside, or the leading edge, let's say, of the channel, and you see that the other side, you pull it out, it'll line up across these swing lows here. So you can make some money going back the other way, but it is a little bit riskier. Your risk reward is going to be smaller, and you'll probably make money, but it just won't be as much, and your risk to reward will be smaller. And if you have any question about the time frame, rather the channel, have any question about the channel, always go down to a lower time frame moving average, and make sure that the moving average crosses. I've lost my spot there, but you could see 5 minute time frame. Before you take a counter trend trade, you might want to wait for the moving average to cross. So like in this case, it's going up, but if you were to short it here, which you could, just wait for that to cross. And see, here to here, you could have made, just by doing that, you could have made, you'll see that's 67 pips. Well worth it. Just going from here maybe to the middle, you see it starts to turn around, the blue's going and going upwards. It's a good time to just get out of the trade. In fact, when it crosses, you might want to ride that up until you see the moving average cross again. Kind of a target of opportunity, but if I was you, I wouldn't get too much in the weeds, following every movement of the moving average cross. You're better off going from the channel. One side, create your cross channel. You see how easily this goes back and forth, and it's predictive. You do have the moving averages here. Even if it blows you out, it's fine. Just get back in over here, because you're expecting it to go down this way across the channel. So when it crosses here, so you sell it there because it's at this side of the channel. So you want to sell and moving average cross when you're at the leading side of the channel, or buy the leading side of the channel when it's going up. And you can also sell on the lagging side, or buy on the lagging side depending on which direction you're going. Just be more aware that you might have a much smaller risk to reward ratio. So I like this British pound Japanese yen currency pair, because it actually it actually moves a lot more. That scares a lot of people, but it shouldn't scare you. It's an opportunity. See, volatility is good as long as it's not just wild and chaotic. If it seems too wild and chaotic, and you don't find your ability to predict what's going to happen to be very reliable in certain circumstances, don't trade it. Just don't trade it. So what I'm doing here is just showing how the channels tend to form, to go back across the channel. One channel came down, another channel goes up. This one kind of I guess goes all the way across both end, up and down. But here you see it bounce at the 50% mark and move back, and actually formed another channel there. In fact, it's almost the same exact width, almost the same exact angle, and you'll see that happen too. So it goes up, and then bounces off the 50 back down, because this is already outside the channel. You can guess it's going to be pulled back in, and in this case it is. It bounces off the 50. You see the moving average cross again. You can ride that up. If you're afraid, you see this is already still on the north side of the top side of the 200 moving average. It comes back below twice here, and the second time it continues to go on down. So you can actually trade. You can trade those if you want. I mean, you're talking about 30 pips or something, which is probably worth it. And using the back and forth of moving averages, see, you could sell here if you wanted to and buy it back there, and even if it's a small loss, you're still making money. The outside of the channels, though, tend to be a good filter as to when to get in. You don't get caught in this mess here, and you just kind of fire it and forget it, and do your thing. Now this is probably showing me here has this long pivot, but this was the top of the channel, and I didn't have it quite drawn properly. I need to go back and need to adjust it so that the top of the channel hits these points here. You see that this did go outside quite a bit of the channel, but that does happen sometimes, which is why you want to use the moving averages to kind of confirm. If you use it here, you might have noticed that, well, it did go back the other way. That's fine. You can use the average cross as a signal to get out, like a close profit here. That was 54 pips right there. Or, and that's what I would prefer to do, and let it take you back wherever it's going to go, and then wait for the cross again to come back down. So you get into it right around here again, And then again, you set your stop using the Bollinger Band. Takes a while to draw it. So I would see my stop, I think right there. And that's where the price was. So whichever's higher, the Bollinger Band or the price, you want to put your stop right on the outside of that, just outside of it. Anyway, I'm getting tired. It's a little longer than I expected I would make it, but I just wanted to also do kind of a test run on the streaming to make sure the streaming all works properly, and then make sure the audio is good and everything else. So anyway, I know this is probably a little scattered. It's late here. It's about 11:30. But there's some nuggets in there, so hopefully that's still useful for you. And I'll probably go back over it myself and take notes. And as I kind of stream of consciousness here, I can go back and watch them again. And from the stream of consciousness dump, I'll take notes, and then I'll use it to write, written publication, slides and things like that, even an actual script, so that the next videos come out a little better. Anyway, that's all I have for now. See ya. Happy trading.